Hi, in this video I'm going to cover labor costing, which is the second part of cost accounting. This video covers the entire chapter of labor costing, and in next video I'm going to have question and answer which is related to the labor costing chapter. So what does labor costing mean? The cost or the sum of the all wages paid to employees and the cost of employee benefit. So this is the basic definition of labor costing. It means like the payment to employees, the salary payment to employees and the related transaction to that. Yes, I divided the chapter into three. First one is method of wages. Second one is process flow, means how business doing transaction related to the labor costing, and third one is recording transaction. So how they are recording transaction in pay sheet and ledger account and journal entries related to that. So these are three parts of the chapter. So if we take the method of wages, generally we do divide that into two. One is time basis and second one is what you call output basis or unit basis, or we can say as piece basis as well. So what does time basis mean? So time basis means like you are paying the salary based on the number of hours the employee works. What does output basis? You are paying the salary based on the units produced by the employees, right? So time basis equals to number of hours into rate per hour, right? So this is the basic, right? So you should know the basic way of calculating, the wages for the employees. And the second one is output basis, which is number of unit into rate per unit, right? And we do have overtime payment also. So overtime payment equals to number of overtime hours into rate per overtime hour. Generally a business won't pay based on time basis and output basis together for one employee. For an example, let's say if an employee works for 8 hours per day, and if he produce 800 units, they won't pay for 8 hours and for 800 units for one employee, right? But there are chances where, let's say, the time is 8 hours and the target is 800 units, but he produced 1000 units. For that, what they will do? They will pay for 8 hours plus they will pay for additional 200 units. They won't pay for 1000 units because 800 is their target, which has to be produced within that 8 hours, right? So 8 hours they will pay for based on the time basis. And for the additional units, which is 200, they will pay based on the output basis. For an example, if one employee works for 8 hours and he produced 1000 units, and 1 hour they are paying 200, and for 1 unit they are planning to pay 5. So none of the business will pay 1600 plus 5000, right? Because if they are doing so, it means they are paying twice. But if the employee produced 1200 units and the target was 1000, so what they will do is they will pay 1600 for 8 hours plus they will pay for 200 units, which is the additional units he produced. So 200 into 5, they may pay 1000, so total 2600. So that is possible, right? So that understanding you should have, which is kind of a basic scenarios we do have in salary and wages. Fine. What does overtime payment means? Like if employee works more than allocated hours. In this scenario, let's say allocated hours is 8, and if he works for 10 hours, it means he works additional 2 hours, right? So they will pay for that. So rate per overtime hour will be given. So let's say if they are paying 300 per hour per overtime hour, then overtime hours is 2 into 300, that is 600. So this is how it works. So generally we do have these three type of wages, but we may have travel allowance and medical allowances, those as well. So that depends on the question. So you should know how to calculate the wages based on time, output, and other scenarios which they give in the question. Yes. The second part of the chapter is process flow. Process flow is like how they are calculating salary, and from that how they are calculating EPF and ETF contribution, how much they are deducting from salary for the employee loan, and how they are paying the salary. So these are the transaction which we are going to record in pay sheet, and you should know the journal entries, and you should know how to record in the general ledger accounts, right? So I'm gonna discuss the process flow, where you can get the entire picture of the chapter or entire picture of the transaction related to the salaries and wages. This is the process flow of a business related to the salary and wages. A business would transfer the full amount to salary account. So that's the first transaction, where you should know how to calculate the salary, which includes the basic salary based on the time or output, then overtime and other allowance, might be travel allowance or health allowance, like that. So that is a total amount which is transferred to salary. But the business won't pay the entire amount to employee. Why? Because they have to transfer specific percentage according to the law to EPF, and if employee has any loan, so they will deduct that amount, and the rest of the amount will be paid to the employee. So salary, the first transaction, where you should know how to calculate, you should know to calculate the total salary, right? Then they are deducting these two. First one is loan repayment. If the employer has any loan, or if the business gave any loan, so they will deduct every month from the every month salary. So they will deduct that, and the EPF portion or EPF contribution from employee, which is 8% generally, but in the question they will give the percentage. So you have to calculate the amount of the contribution of employee for the EPF. Generally, this is based on the basic salary, which I will discuss later in the third part of the chapter. Fine. Then they will pay the net amount to the employee. Therefore, you should know for the fact the total salary which is there in the salary account will not be paid to the employee. The amount which we are paying by cash to employee is the net salary after deduction of these. So first one is A is total, B is the deduction. We do have these two in this question. We may have some other loans or some other deduction as well, maybe festival deduction or like that from employee salary. Then they will pay the net to employee. Then this is something related to the business transaction, or how they are contributing to EPF and ETF. First one, 12% generally they are contributing to EPF. That is I meant here by D, which is the amount transferred by business to EPF payable, which is expense for the business. This 8% is not expense for the business. Why? Because this is deducted from salary, not from business expense. But this 12% which business contributes, which is expense for the business, and this will be transferred to the payable account. Why payable account? So what is EPF payable? The amount which we have to transfer to the specific authority later. Therefore, that amount, the total amount, which is 8 plus 12, 20%, will be paid to specific authority later. Therefore, this is payable to us in the sense payable to the business. Then ETF contribution, 3%, again that is from business they pay. Therefore, that is expense. Again, that also will be paid to the specific authority. Therefore, that also payable. Both will be paid to the specific authorities. That is how it works. So D, E and F are the transactions related to the business. So what is F? Where they are transferring the amount to the specific authority. So that part is very important. Generally in syllabus they don't mention anything about the transaction to the specific authority, but it will be tested, right? So this is the entire process of the business related to the salary and wages. The total salary A, deduction B, net salary C, then EPF contribution of employer or company D, ETF contribution of company E, then both payable amount will be paid to the specific authority. I put F1 and F2. F1 is ETF transfer to specific authority, F2 is EPF transfer to the specific authority. So this is the entire process flow of the business, which will be linked to record the transaction, in the general ledger account, to create the pay sheet, and all transaction related to the salary and wages. Fine. So now I'm gonna discuss about the transaction, how we have to record in pay sheet, how to record in general or how to record the double entry for that, and how we gonna record in the ledger accounts. For that, this flow is important, right? So next I'm gonna explain you the three parts of the third part, which is pay sheet, journal account, journal entries, and how to record in the ledger account. Fine. So this is the third part of the chapter, which is recording transaction, right? I divided this third part into three. First one is pay sheet, second one is journals, third one is general ledger account. The first one is pay sheet. You should know to prepare pay sheet, and from that you should know to record the transaction in the journal and to transfer the values to the general ledger account, mean T accounts, right? So first we look in to the pay sheet. So here we will have employee name, right? And we are having earnings, then deduction mean the amount which we are deducting from salary. So after that we will pay the net salary to the employee. Then we have the contribution by the company. So we do have EPF and ETF contribution by the company. In some question they may not have ETF, but when you are preparing the format, don't think about it, just prepare in a way with the ETF column. So if they don't have ETF, we'll just leave it. Fine. And further, sometime in general format, which is mentioned in the teacher's guide, they have the employee number and other details, which is not needed. Why? Because they're gonna give the marks for the amount which you are finding in each columns. Fine. If they just give the number instead of name, we'll put the number here, right? So what does earning mean? Earning is the amount which is earned by the employee, which includes the basic salary, overtime payment, and other allowances. So you should know to find the earnings, and the columns will be decided based on the question. Generally we do have three, but before you are going to divide the columns, you have to check the question and find how many columns you needed. So that is very important. Why? Because if you make a mistake there, so you have to cut off the entire thing and you have to prepare again. So that takes more time. Therefore, you have to check the question, find the number of columns you need, then you have to divide the columns. So let's say we have basic salary for an example, and we have only overtime. So what we have to do is we have to divide the column based on the question. So I just have basic and overtime, and then you have to find the total. Likewise, deduction, I assume I have only three. First one, anyway we do have, or we should have EPF in all the question. So EPF contribution of employee, because I am deducting from my earnings, from the salary which I with the business giving to employees, right? Therefore, this is the deduction, this is the contribution of the employees. And let's say we have loan, employee loan, and the total. Then net, so this is contribution of company, EPF and ETF. Fine. So this is the total salary, this is the total deduction, and this is the net, means this minus this, means total earnings minus deduction is the net, and the contribution of EPF and ETF. Let's say we have 2 employees, right? And basic is, let's put 10,000 and 20,000. So this part you should know to calculate the values. So that takes some time in the question. That is basic maths. So they will give the hours, they will give the days. So you have to use those information and calculate this. Likewise the overtime as well. So overtime, let's say 2,000, and he doesn't have any overtime, and the total is 12,000 and 20, right? Generally the EPF and ETF is based on basic salary. In question they will mention on which payment you have to calculate the EPF contribution of employee and employer. It means whether it is on total or whether it is on basic salary. So that will be given in the question itself. Fine. So I am assuming EPF contribution is on basic salary, right? And I put this as 10%, and this as 15%, and this as 3%. Let's say that is given in the question, right? So 10% on basic, which is 1,000, here 2,000, and loan deduction means what? The loan repayment means a business is already given a loan like long time back, and every month they are deducting from the salary of the employee, right? So the loan given by the business is what for the business? It is asset for the business, because business gave the loan. It is not the business received loan, and it is not about the loan which we already studied under non-current liability. This is a loan which is given by the business to employee. Therefore, that is asset. So that point is very important, right? So loan deduction. This is loan deduction. This is not giving loan to the employee. What is the double entry when they are giving the loan to the employee? What is the double entry when they are giving loan to employee by the business? Yes, we are giving. So cash account credit, because cash goes out. Debit employee loan account. So that is not related to this one. This is after we gave the loan to employee, we are deducting every month from their salary, right? So that is what we call as this one. So the loan given to employee won't hit or will not be shown in the pay sheet, because the double entry is employee loan account debit. There's no relation to the salary account. So employee loan account debit, which is an asset, and cash account credit, right? So this is about the repayment of the loan, right? So let's say we are repaying 2,000, and here he is repaying 3,000. So both employee took the loan from the business, right? So total deduction is 3,000 and 5,000, right? So net salary is 12 minus 3, so 9. Again, when you are preparing the deduction columns, again you have to check how many columns you should prepare, you should have based on the question. Someday you may have 3 like this, sometime you may have 4. Let's say you have loan, house loan, and some other loan. So you will have 2 columns like house loan and some other loan, right? So based on the question only, this has to be decided. Therefore, you have to read the question before you are dividing the columns, or before you are preparing the pay sheet format. So net is 12 minus 3, 9, 20 minus 5, 15, right? Then EPF contribution, I already told you, like 15 and 3% are given in the question. Generally it is not 15, right? It is 8 and 12, but I am assuming to make the question easy, to make the example easy as 15. Fine. So 12,000. So 10,000 is my basic. 15% is 1,500. And 20,000, 15% is 3,000. So let's say they didn't say anything about like on which base you have to calculate the percentage. So what are you supposed to do? You have to calculate based on the basic salary, not on the total. If you're going to calculate on total, they should give in the question saying your EPF contribution is based on the total salary, like they would say 10% on total salary, right? Fine. And ETF 3%, so 10%, 1,000, 300, right? And this is 600. So this is the format of the pay sheet. Fine. From this, you should know to record the transaction, which is the second part, right? For that, you have to get the total. Total, when you're calculating, when you're trying to get the total, you don't need to get the total of these two columns because that is not needed to prepare the journals. So I just start from here. Because no point in calculating this, no point in getting the getting the total of basic salary because you are not going to use it, right? So this is 32, this is 3, here 5, 8,000 and 24 means 32 minus 8, 24, or else you can get the total of net. This is 4,500 and this is how much, right? So this is how the pay sheet looks like, right? Then we're gonna record the transaction based on the value we got from the pay sheet. That's it. That is the second part of this. Fine. The first one is the total salary, which is the addition of basic and overtime or any other allowance, right? So we should know the entry for this. This is the expense for the business. So generally in company question or suspense account or what you call trade account, those chapters, we don't have such a question, such an account called salary and wages control account. We just record directly to the salary, right? In costing, we are introducing an account, a temporary account called salary and wages control account. Therefore, we are transferring all the amount to salary and wages control account and we are deducting all the deduction from there and we are paying the net. So that is important, that is a new thing. Earlier in company or in sole trade, we don't have a specific account called salary and control account. Fine. So first transaction, right, which is total salary. So 32,000 is the total salary. It is anyway expense for the business. We know for the fact the total salary which to be shown as an expense in income statement, which we studied or which we normally study in company and sole trade as well. So first entry for the total salary, salary and wages account debit 32 and salary and wages control account credit 32,000, right? So we need to show this separately. We have to record the first transaction for the total salary, which is one of the expense related to the employees. Then the deduction. So B, let's say B deduction. So in this question we have two deductions from the salary, which is EPF contribution of employee and the loan repayment. So under deduction, first transaction is EPF contribution of employee. So EPF contribution of employee is what you call, it will be transferred to the payable account. Therefore, the salary, wages and control account, which is temporary account, from that we are removing or we are reducing the deductions and transfer to the specific account. Fine. So the first one, which is EPF contribution. Right? So salary and wages control account debit. How much? 3,000. And EPF payable account credit 3,000. So that is a contribution of employee for the EPF, which is payable to the specific authority. So that it goes to EPF payable account. And the second one is loan. So loan repayment. So it depends on the question. If they give some other deduction, you have to do in the same way. Let's say if they have some festival advance or something like that, again we are deducted from salary and wages control account, therefore salary and wages control account debit, festival advance account credit, right? So likewise for the loan repayment, salary and wages control account debit, how much? 5,000. And loan, let's say employee loan, employee credit 5,000. Right? So that is the deduction part. Then what we do? So this is the B. Right? So we have the total B is not needed to be recorded because we are recording these two separately, right? Then what we do? So first one is total salary, then we are deducting, then what we do? We will pay the net. We'll pay the remaining amount to the employees. So I'll write C here, the net salary. So net salary, we do have two options. Either we can pay by cash, or we can keep it as a payable amount. So that also will be given in the question. Based on that only this will be decided. So in some question they will say this salary will be paid at the end of the month. In some question they will say salary will be paid the second day of the next month. So if it is second day of the next month, this will be transferred to the payable account, right? So let's say paid by cash first way. So if it is paid by cash, obviously we know cash account credit 24,000, which is net, which is, I would say this as C, right? Right. So cash account credit 24,000, and the temporary account we had 32 in the credit side, and we deducted 3 and 5. Therefore, we have a balance of 24. So when we are paying and when we are transferring to the payable account, we don't need to keep this account. Therefore, we have to close the account. So debit should be salary and wages control debit 24. So now you have a question or you have a doubt saying, no, it should be salary and wages account. No, why? Because we already shown 32,000 in the salary and wages account, that is fixed. You don't need to touch that because salary and wages is it should be your total salary or your gross salary. We can say gross as well here, right? Instead of total, we can say gross as well. So that is the gross salary. So we should show the gross salary in the salary and wages account. So that is why we are maintaining the salary and wages control account. We are transferring the amount to that, and we are deducting whatever we want to deduct. Then we are paying the rest to the employee by cash, or will be transferred to the payable account, right? So the second one, payable. So this is first option, or this is second option. Or like you can pay by cash, or it will be transferred to the payable account. So when you have transferred to payable account, salary and wages control debit 24 and salary payable credit 24,000. So that is a C part. First one is gross salary, that is a gross. Then second one is deduction, and third one is the net, which is paid or which would be payable. The next one is company contribution, which is EPF contribution and ETF contribution. So I would say EPF contribution as D and ETF contribution has E, right? So company contribution, D is EPF, E is ETF, right? So EPF contribution, ETF contribution of company, you should know the double entry which you studied in salt trade. So EPF contribution is expense for the business, therefore the double entry is EPF expense account debit, EPF payable account credit. Why payable account? Because this has to pay to the specific authority. ETF is also again expense. So double entry is ETF expense account debit and ETF payable account credit, because this also has to be paid to the specific authority. So EPF expense debit, debit 4,500, then EPF payable credit 4,500, ETF expense debit 900, then ETF payable credit 900, right? So those are the contribution by the company. So these are the transactions related to the pay sheet. But if we just go through and check the process flow, we do have another transaction which is F, which is actually the transfer of the EPF contribution and ETF contribution to the specific authority, right? So that journal entry you should know, but that is not there in the pay sheet because that is not related to the employee, right? So if we just record that transaction, in this example, if we are transferring EPF to the specific authority, mean if you are paying the amount which is available, which is there in your EPF payable, which is 4,500 and 3,000, 7,500 you have in your EPF payable account. If you are transferring the 7,500 to the specific authority, then the double entry you should know. But generally this 7,500 will be transferred in next month only, right? So that point is very important. I will explain that when I am recording the transaction in the T account. Let's assume we are transferring 7,500. So we put paying EPF payable. Obviously cash credit because we are paying, or bank credit 7,500, right? And EPF payable debit 7,500 means what? So once we transfer, then my EPF payable account should have balance of 0 according to this example. We had a balance of 7,500 in the credit side, now we are transferring. Second one is ETF payable transfer, like paying ETF payable. Again cash credit, how much ETF payable? We have 900, and ETF payable debit 900. So here I am assuming that current month's EPF payable and ETF payable is transferred to the specific authority at the end of the month, which is not possible. But in your question, they will relate the EPF payable and ETF payable with the prior month. Let's say if you are preparing for March, your February EPF payable and ETF payable will be paid in this month, right? March will be paid in April, which is not needed. So that I will explain when I am recording the transaction in the ledger accounts. So these are the entries, journal entries you should know. First one is the gross salary. The double entry is salary and wages account debit, salary and wages control account credit. Then deduction, which is B. So you are deducting loan. So from salary and wages control account, because you can't touch salary and wages account which is fixed, right? So salary and wages control account debit, and what you call loan account credit, employee loan account credit. Again you are transferring your contribution, mean employees contribution to the EPF payable account. which is again from salary. Therefore, salary and wages control account debit, EPF payable account credit. Then what they will do? They will pay the net salary to the employee. They can pay or they can keep it in what you call salary payable account. Right? So what is the difference? In the question, if they mention salary is paid at the end of the month, that is paid. In the question, if they mention salary will be paid the second day of the next month, that is payable. So if it is paid, double entry salary and wages control account debit, cash credit because you are paying. If it is payable, salary and wages control account debit, salary payable account credit. After this, salary and wages control account will be closed because it will not have any balance. It should not have any balance. Fine. So that is the transaction related to employee. Then employer contribution to EPF and ETF. So which is expense for the business, EPF expense account debit, EPF payable account credit. Then ETF expense account debit, ETF payable account credit, that is D and E. Then what they will do? They will transfer the EPF payable and ETF payable amount to the specific authorities. So when they are transferring EPF payable account debit, because we are taking from EPF payable account and we are paying by cash account credit or bank account credit. Then if it is ETF payable account debit, cash or bank account credit. So these are the transactions related to the salary and wages. And the third part is recording the transaction in ledger account. So I'm going to record the transaction in the specific ledger account now. First one, 32,000. So 32,000 double entry is salary and wages account debit, salary wages control account credit. So I'll prepare salary wages control account like this. Why? Because we're going to have more transaction in the salary and wages control account. So double entry is salary and wages account, and here salary and wages control account, right? So the double entry is salary and wages account debit 32,000 and salary wages control account credit 30,000. Here I'll put salary control, here I put salary account, right? So that you know. Then deduction. So deduction, first one is EPF contribution of employee, double entry is salary and wages control account debit, which is 3,000, right? EPF payable. Then EPF payable account credit, EPF payable, right? So credit, I'll write salary and control, 3,000, right? Then I am deducting loan, so I'll write loan here. Loan how much? 5,000. And I prepare loan account, so I'll write employee loan. So credit, I will record salary and control 5,000, right? So those are the deduction of employee. Then I will pay the net salary. So to pay the net salary, I will close this, right? So 32. I have two transactions, 3 and 3,000, 5,000. So my balance is 24,000. You can pay by cash or you can transfer this to payable account. So let's assume I'm transferring this to payable account. So I have to write here salary payable 24. So don't write carried down because salary and wages control account should not have a balance there. So this will be transferred to the salary payable account. If you do in a proper way, this amount you have to record in salary payable account. So I'll write salary and control 24, right? Fine. So net is fine. Then EPF and ETF contribution of employer, double entry is for the D, EPF expense account debit and EPF payable credit, right? So I'll write EPF expense here. So EPF expense account debit, EPF payable credit. So here it is EPF payable. How much? 4,500. And here EPF expense 4,000. So likewise ETF expense and ETF payable. So I'll have T account for ETF expense. and I'll have T account for ETF payable. Right. So double entry is ETF expense account debit 900. So I'll write ETF payable and here ETF expense. So this is how you supposed to record in the ledger accounts. Fine. Then what you should know is this account is closed and we transfer to the payable account, and salary wages account, which is what for the business, which is expense for the business. So I'll close this and I'll transfer this to the income statement. Sorry, to those. EPF payable is what? Is liability. So I'll have a balance of 7,500 which will be transferred as, which will be shown as a liability. Let's assume we already have a balance of 5,000. So balance means what? So if we have a balance here, let's say we have a balance of here, we have a balance of 5,000. So what does balance means in EPF payable? It means the payable from prior months. It might be 1 month or maybe 3 months or something like that. Right? And in the question, if they mention this payable amount will be paid in this month, so that is how they will test the question, because this 7,500 which is related to this month, like 3,000, 4,500, that they won't pay in the same month, they will pay in the next month. But this opening balance which is 5,000, which is taken from last few months, will be paid in the current month. So let's assume if they are paying 5,000 in the current month. So what is the double entry for that? Cash credit and EPF payable debit. So 5,000 is the value I just assumed, which may be from the last month, right? So cash paid, right? Then we'll have the balance. And employee loan. So employee loan is what? 5,000 is what? We are repaying. Means what? We should actually have a balance there. That will be given in the question. If they don't give any balance in the question, you can't close this account, because this is wrong actually. They should give a balance as an opening balance, because employee loan, deduction means what? We are deducting from the salary. Why? Because the employee is already taken a loan. Means there should be a balance. Which side? Debit side. Why? Because we gave to employee. So if we gave to employee, what is that for the business? That is asset for the business. Therefore, we will have a balance here. That will be given in the question. Let's say 15,000. Then only you can close the account. Right? If you close the account, you will have a balance of how much? 10,000, which is asset, because this 10,000 will be paid or will be deducted from the salary in next few months. Right? So that is employee loan account. Salary payable is what for you? Liability. So I would say close this and I would carry it down 24. And EPF expense is what for you? Expense. So it will transfer to the income statement. ETF expense is again expense, transfer to the income statement. So likewise, like this opening balance, let's say if we have opening balance in ETF payable also, like 2,000. And in the question, if they mention this 2,000 is paid in this month, so cash account credit, ETF payable 2,000, and we'll have a balance of how much? 900, 2,900. So this is how they are recently testing with the balance of employee loan account, EPF payable account and ETF payable account. Whenever they are giving a balance in EPF payable and ETF payable as well as in employee loan, you have to think and you have to consider that and do accordingly. So whenever they are giving a balance in EPF payable generally, or in EPF payable, ETF payable, generally there will be adjustment related to the balance. Means they will say this is paid, something like that, right? So that is the entire part of the salary and wages, right? I'll add the important points somewhere here, right? Then you know what are the important points related to the chapter, right? So the important points are, right? First one, you should know to calculate the salary, like basic and overtime. And first point is generally, if they don't mention anything in the question, generally EPF, ETF contribution is on basic salary. Second point, employee loan account is an asset account. So if they give the balance, you have to put in the debit side, and contributed or the deduction amount should be in the debit in the credit side. So we'll have a balance at the end of the month. Fine. And the third one, EPF, ETF opening balance is given. If they give opening balance, if they give EPF, ETF opening balance, you have to consider that generally in the question they will mention that is paid in the current month. So EPF, ETF opening balance is credit balance, which will be paid in the current month, right? So payment. So EPF, ETF opening balance is given. If they give the opening balance, you should know to record the payment entry for that balance. In the example, I assumed to have the balance as 2000 as ETF payable and 5000 as EPF payable. In the question, they will give that. You have to just put the balance and you have to check whether there are any transaction, any adjustment related to that opening balance, right? And fourth one, employee related expense, which is a question generally they ask in almost all the papers, at least in MCQ. This question can be tested in three different ways. First one, they can ask like employee related expense, or they can say what is the impact in your net profit because of the transactions. Third one, what is the impact on your equity? So all these three are same question. Mean if some expense related to employee, obviously will impact the equity, right? So three expenses are related to the employee. Only three. First one is gross salary, which we are showing as salary, which is the salary wages amount 32,000, not the net, because 32,000 is the amount which is transferred as salary in the income statement, right? Second one is EPF expense being contribution of employer, and then ETF expense. So these are the important points related to the chapter. First, you should know to calculate this. Once you calculated, you should know on which balance you have to find the contribution. If they mention to calculate on gross, then you have to go with that. If they don't mention anything, you have to go with the basic. Then employee loan account, generally they test that. It is an asset account which has an opening balance of debit. Means what? The loan is already given to employee. And what is the double entry when they are giving the loan? Double entry is employee loan account debit, cash account credit. So this is for the loan given, right? Then the deduction which you know, right? Then EPF, ETF, whenever they are giving opening balance, you should consider that, because generally they are giving adjustment related to the opening balance, means the payment to the specific authority, right? In general terms, like every month EPF and ETF payable amount will be paid in next month, right? So if they give opening balance, they will give adjustment on like whether it is paid or not, right? Then employer related expense, we have three expenses related to employee, which is gross salary, EPF expense, and ETF expense. This question can be asked in different ways. They can ask directly like employer related expense, or they can ask what is the impact on profit. You mean all these three are expenses, therefore your profit will reduce or will be deducted. Third one is what is the impact on equity, again same question, or they can ask what is the impact on retained earning. Retained earning also consider as equity, like if we relate the chapter with company. So these are the important points you should know. So this is the entire chapter of labor costing. So I have introduced the different methods of calculation for the wages, then the process flow, how the business works, then the recording part, which is important. Recording I have divided into 3: pay sheet, journals, and the ledger account transaction, how to record in the ledger account, right? Then the important points. I'll share the question in the next video and I'll discuss the answers as well. So thank you guys. We'll catch up in next video with the question.